should a shoe company be trading at a tech multiple or a SaaS multiple? You're effectively halving revenue year after year while increasing your losses. The play of the product strategy became color variations. You don't need venture money to build out your vision, but venture money helps you go at certain distance.
Welcome to our new show, The Debrief. It's myself, Nawaz, host of the Inquisitive VC. And on this new show, I have a co-host, a good friend, Vignesh. Feel free to introduce yourself, man.
Thanks for having me, dude. I'm excited. Trying something new and different. I think our own channel to have a little bit of a yarn about venture and VC and tech. But yeah, super excited to be here. But I work with Nawaz at GD1, investing in some pretty cool New Zealand technology companies, going global. And so, yeah, really here to be talking a whole lot of shit about a whole lot of stuff, man.
I think you're right. Like all these stuff that we hear online is just not relevant to us except from the general news items. So hopefully this is a lot more useful to the local crowd.
Yeah, I mean, I'm super excited because I think, look, we all essentially grew up in venture, listening to All In, 20 VC, and those are awesome. But man, like being able to have a bit of commentary about what's happening in our neck of the woods is super important. So I'm excited we're finally getting this started, man.
Yeah, yeah, it's been a long time coming. You want to give a bit of a background and your kind of insight into why New Zealand and why we're kind of doing a lot of this?
Look, I think the key thing is New Zealand's got its own scarcity stuff, right? And so whether that's the capital, whether it's like the distance, and there's not enough talked about the mechanics of a deal or how or why certain things eventuated. And there's a lot of success starting to come in this ecosystem. So whether it is the halters, which we'll get into in a little bit, whether it is kind of the ups and downs of a journey, I think those stories have to be told. I think we're starting to see folks talk about things in the paper and media interviews, but you're not really getting that unfiltered audience of kind of people dissecting kind of the why, the how.
Yeah.
And so I think this is a good opportunity to do all that.
Yeah. Okay, very cool. I guess let's one of the things I wanted to chat about and kind of hear your opinion is I don't know if you saw the news about Allbirds and how they got acquired for 68 million when they peaked on the stock market at something like 4 billion
Yeah.
dollars. One of the funny things I read as well was that the stock that Allbirds currently hold is like actually $70 million of stock,
Yeah.
but they got acquired to a discount of
Oh,
even stock,
yeah.
which was wild.
Yeah, I read the same thing and holy shit, that was eye-opening. And like, who was the acquirer? Like American Exchange Group, who are like notorious acquirers of distressed like fashion labels,
Yeah.
and they knew how to treat this deal
Yes.
at a discount to inventory, which is kind of batshit crazy. But you're just spot on though. Shit, discount to inventory.
Yeah,
My
that's
God.
wild. What do you think about that in terms of like, Allbirds was like this big name. I think it's still, people still know it. When you consider it from our point of view of like venture, it's a D2C product business, like shoe company. It seemed like it kind of got a lot of the tech hype, tech multiples.
Yeah.
Like, I don't see how that makes sense for like a D2C company. Do you have like any thoughts?
Man, look, you know me at GD1, and for those who are listening, I invest in atoms and bits and like pure play tech in that regard. So when I look at something like an Allbirds, and that's no disrespect to
Of
the
course.
team and the founders and all the hard work that goes in, but the question I always ask myself, which you're kind of hinting at, is like, should a shoe company be trading at a tech multiple or a SaaS multiple? That's the question.
Yeah.
And I think the market proved a resounding no. Like, so, dude,
Well, in saying that, I actually don't know this, but do you know if like the early investors actually made much money after the IPO? They're still in these lockups until
Yeah, look,
now.
that's a good question. I think I took a look at some of the data, but it was something like the IPO was at roughly 10x revenue,
Yeah, right.
and then and the IPO peak was something like several billion dollars. I've
Yeah,
got it somewhere in my
it's like
data.
4 billion.
Yeah, yeah, yeah. And then it's like you're kind of peaking up into several $100 million of revenue, and then you're effectively halving revenue year after year while increasing your losses.
Yeah,
And so you turn into that whole growth at all costs. And so it's kind of like it came out with a bang and then just starts to ride the cliff down.
yeah,
But still, a 10x multiple on debut
yeah,
for a shoe company.
yeah.
I mean, like, what is it like? You just have to ask Claude or Google it.
Yeah,
But Nike's trading at a 3x.
yeah,
I mean, I don't know about you, but I mean, growing up watching Back to the Future and the inflatable like
yeah,
Nikes and all the Air Maxes and the Jordans, there's tech in that,
yeah.
but still, they're trading at 3x
Yeah,
revenue.
yeah, yeah, yeah.
And we're talking like, again, no disrespect, wool sneakers. Should it be 10x?
Yeah, and that's fair. Like, and it seems like there is a lot of interesting D2C products in like
Yeah.
New Zealand's market. Like, I don't know when, obviously I spend a lot of time in like software and crypto investing.
Yeah.
Um, I haven't done a lot of investing in like D2C products, but with like Allbirds as an example, like how do you think founders should be thinking about it when they're building D2C kind of products? Should they be going down the line of venture like Allbirds did, or it's more of your standard, bootstrap, run it on revenues and profit type business?
Yeah, yeah. It's a really good question. I think again, as someone who's an Adam and Bits investor,
Yeah.
right? I'm always looking at the defensibility of IP, technology, lock-in. But if I look at Allbirds, what did they have, right? And I'm just trying to be really explicit about it. You're buying a brand, you're buying a sustainability moat, or narrative, and then you're buying a direct-to-consumer data play around what consumers like. Again, when I hear those things in like combination, doesn't exactly scream out as a long-term defensible thing, but
Yeah.
it's super easy sitting here casually in like our ivory tower
Yeah.
going like, oh, of course it wasn't going to work. But it's kind of the difficult thing of building a consumer business. I feels like the consumer is always so fickle. Like
Yeah.
one moment they like it, one moment they don't. And I remember when I first moved back to New Zealand, 2018,
Yeah.
everybody here was wearing Allbirds,
Yeah.
the wool runners. Like everybody was wearing. I think even you were wearing wool
Yeah.
runners when I first met you.
Yeah, I do.
And meanwhile,
I still have them.
I was still wearing the same like Lacoste white sneaks that I'm wearing, and everybody was wearing them, and that was the same shoe, but different colors
Yeah.
thereafter.
Yeah, yeah.
And I think I read in one of the postmortem articles, and that's the beauty of the world we're in. There's so many postmortems, and it's always like, oh, they failed for these reasons. But
Yeah.
the most striking evidence was the play of the product strategy became color variations.
Yeah.
And that's verifiable fact. Like it literally became color variation
Yeah,
as
yeah.
a product strategy.
You'd
And
wait
it's
for a
like,
cool new color to drop.
it's
Yeah.
like, damn.
Yeah, yeah, yeah. That's a good point. Yeah, I think because the other thing I saw like last week as well was that in the States, one of the newish drink companies got acquired for like $1 billion plus. And a VC on Twitter tweeted that, D2C does have venture returns.
Yeah.
So I guess it's possible.
Yeah.
It's just, I guess, harder than doing it in tech.
Yeah. I mean, it's kind of like what's that famous one? Liquid Death.
The water.
The water, canned water.
Yeah.
But if I'm remembering correctly, it was like it was water aimed at something like Christian rock concerts, and where there's no alcohol.
Yeah, right.
And the branding collateral on the can is like a skull and crossbones and heavy metal, and it gives you the feeling that you're partaking in something which is like somewhat sacrilegious or contraband. And versus where are you actually at a Christian rock concert?
Yeah.
And then that was purchased for $1 billion or something. And so I can fully believe it. But you got to strike when the iron's hot.
Yeah.
And that was an acquisition, right? Yeah.
Yeah, yeah, yeah.
Yeah. It wasn't a list on an index
No.
and then
Yeah. Most of the D2C stuff I've seen is actually just acquisition.
Yeah, which makes a lot more sense. But yeah, there's also a really interesting Kiwi. Uh, God, his name escapes me, but he's a really cool Kiwi who is based in New York. He used to be a professor at Wharton, and he became known as the marketing guru for D2C startups. Uh,
Is it Dave Noit?
David, we're blanking,
Yeah.
but
We'll have to, yeah.
but he's an OG. We'll get the name afterwards.
Yeah.
But I remember the Allbirds started at Wharton on the
Yeah.
East Coast, and then Warby Parker and all that stuff started at Wharton.
Yeah.
But importantly, they all started as students of this Kiwi from
That's
his
very cool.
marketing class.
Yeah.
And I remember when I caught up with him, he was giving me these insights about how there's always this initial awesome market knowledge around the customer,
Yeah.
which makes you get all this great traction. But then it's the product strategy that holds you through.
Yeah.
And when you look back on the Allbirds journey, it's kind of like that initial spark got you there.
Yeah.
And then the product strategy just coalesced into colors.
Yeah. Fair point. So what would you say in terms of like D2C companies? Would we be looking at them as investors?
In New Zealand, more
Yeah.
broadly, yeah, there's definitely some cool consumer stuff being invested in here.
Yeah.
I mean, what was that Good Air nose buds?
Yes.
And as someone who suffers chronic blocked noses, and I can kind of suspect you're going through it right now.
Yes.
There's stuff like that coming through, anchored by some decent science and engineering
Yes.
innovation. But again, it's like, how do you, the whole thing of like selling to a consumer, the D2C channel,
Yeah.
what's the incentives?
Yeah.
What's the rebates? What's the like discounts? What's the refunds? What's the return policy?
Yeah.
How many channels do you have open?
Yeah.
How are you doing bundled sales? How are you not doing bundled sales?
Yeah.
How are you lumping it with like some other more clinically indicated route? That's hard.
Yeah.
And so when we saw Good Air nose buds, despite being someone who suffered from chronic like rhinosinusitis, like blocked nose, I was just like, I don't know jack shit about how to really sell to the end consumer.
Yeah.
And I consider myself fickle. I don't know how you treat your purchasing.
Yeah. No, I'm aligned. I think also like when one of my early businesses was a consumer subscription box business.
Oh yeah.
So I have like a little bit of
Oh, so you're way
experience in
not
like D2C
yeah.
businesses. And like in saying that, even as a founder of like a D2C business, I wouldn't even go after venture money myself. Like I feel like also founders forget sometimes, or maybe not forget, but it's might be just they don't know how some of the venture fund mathematics work. And it makes it really hard for a business that's a D2C business to kind of fit into that maths to make things work. And you might be exciting, you might be able to tell the story, you might get your first round of money, but now like the pressure is
Yeah.
on and you have to like create this gigantic business. When in fact, if you were not taking venture money and you built like a
Yeah,
cool
it's a
$10
lifestyle
million
business.
business,
Great.
like you made a killing.
Yeah.
But now you're like under all this pressure and you have to continuously keep on growth. And yeah, I feel like generally, not even just D2C founders, like that's something I've been talking to more founders about in general, because I feel like venture seems like this really cool success metric, like you raise like venture money.
Yeah.
It's really just the beginning and
Yeah.
it creates so much pressure as like, you know.
Yeah. I mean, I think that's, and you've lived it. You've lived it on the consumer side. And I think that's a really spot on take, which is you don't need venture money to build out your vision.
No.
But venture money helps you go at certain distance. And so like, if you think about the utility of what our jobs are, you know this from your Web3 stuff and from my deep tech hardware stuff. It's like the dollars helps you achieve an outcome. It's like a means to an end that we invest for scale. And you are then using those dollars to buy people and resources to effect scale.
Yeah.
And if we're selling to the end consumer, holy moly, you better really have a lock on what they want.
Yeah.
Which just seems scary. And when I think about it, like, what's been the other stuff in the last kind of 5 years that's been consumer, which has been up and down? You've had Peloton,
Yes.
which got absolutely wiped and then turned into a meme stock, like arbitrage trading.
Yep.
And then slowly is making a comeback. Was Casper the bed thing in the US?
Yeah.
I can't recall how they're doing.
The other one along those lines is Hims and Hers.
True.
and more relevant to us
Yeah,
in
yeah, yeah,
Australia and New
yeah.
Zealand. Yeah.
Congrats to Eucalyptus.
Yeah.
That's the culmination of some learnings.
Yeah.
Um, Speaking of hims and hers, to that point, I was speaking to someone who used to work at Eucalyptus and who's now doing their own startup. But she was saying one of the core reasons, as far as she understood, why hims and hers wanted to work with Eucalyptus or take ownership was because there was this whole concept of like value added patient like journey thing.
Yeah.
And apparently, for hims and hers in the US, it's very transactional in terms of like selling these healthcare. And of course it is.
Yeah.
But then on the Australian side or other geos, there's very much like this hand holding, knowing you through a journey and kind of like where should we touch the different parts of your health impact and then make you feel like you're part of that.
Yeah.
And so she was saying as an insider, again, don't quote me, and I don't want to out her who it was. She was fairly high up, and she was saying that as far as she understood the transaction, it was about great, you've got a channel, but more importantly, you understand that there's more to the consumer
Yeah.
than just selling them shit. And again, if you're building like D2C, I would argue that's the lesson.
Well, I agree, and I think like the biggest difference between a hims and hers and like an Allbirds is the concept of like need versus wants
Yeah.
in a in any type of business, right? Like you need healthcare compared to like you want cool woolen shoes,
Yeah.
right? So that's I think
With your Patagonia vest.
yeah, and that's the biggest difference I could see like from
Yeah.
outwards.
Yeah.
Uh, and yeah, congrats to the Eucalyptus team on an amazing outcome. I think that's the type of outcomes that really change the entire
Oh,
ecosystem.
yeah. As a segue, I, I read some absurd thing, which is like the number of millionaires it's minted is like some mind boggling number in
Yeah.
Australia,
Yeah, I saw that too.
which is amazing and really feel good. Because I think I was reading even like some of these super early stage VCs there were angels
Yeah.
in Eucalyptus. And despite that round prior to the exit being a bit of a down round,
Yeah.
which surprised me. Like I didn't realize this, but again, this is all anecdotal, hearing LinkedIn conversation. But apparently, there was no cram down in the
Oh,
down
okay.
round,
I didn't know that.
and so because of that, people still own relative amounts of ownership, and then the exit resulted in millions.
Yeah.
So
Yeah, it's exciting. Hoping for something like that here because that would be super cool. And I think that brings us to like the next thing I wanted to chat about, and that's like Halter.
yeah,
Couple of weeks old news, but like the amazing new fundraising round that they announced,
crazy, huh?
scaling incredibly fast
Yeah,
and becoming that icon of a New Zealand company that shows people that, you can build these giants
yeah,
out of New Zealand,
yeah.
replicating the stories of the likes of a Rocket Lab, but in a whole new sector, which is really, really exciting.
Yeah, it's been amazing to see that. It's funny, like we spend a lot of time, as you know, on the road fundraising offshore, and when we're raising for our funds, talking about New Zealand technology,
Yeah.
the number one question people go is like, "Why New Zealand? Like, why New Zealand tech? It's so niche,"
Yeah.
and they keep saying the word niche, and it's like, fuck's sake. Sorry, can I swear on this? Like,
I
yeah,
guess.
yeah. It's like why is it niche? And they just have this view or presumption around what we can create here.
Yeah.
And I think all these stories like Halter help to dispel that notion. And when you tell people
Yeah.
Rocket Lab's a Kiwi started company,
Yeah.
when you tell them about Halter, people lose their minds that a cow collar
Yeah.
is now worth several $billion.
Yeah.
I think it's pretty damn cool. But there's so many stories like that.
Yeah.
So I'm kind of really excited, and it's also an interesting moment because it's like it's a pivotal moment for New Zealand VC because there are some folks who are in it, as you know,
Yeah.
like our good friends at the Ice House, and it's kind of been a long time coming.
Yeah.
It's like a 20-year journey for Ice House,
Yeah.
but more like a 12-year, 13-year venture journey for Halter,
Yeah.
and pretty insane.
Yeah. It takes time to
Yeah.
build like those type of outcomes. I think the cool thing of Halter compared to the likes of a Rocket Lab, I guess I say Rocket Lab and Zero are usually like the big icons used to describe successful tech
Yeah.
in New Zealand. But the biggest difference is that Halter actually had, a proper venture journey, had local venture investors, went through that compared to the likes of a Rocket Lab, which unfortunately didn't get much support from the local venture scene. So I think that's another cool story of like, yeah, where the local, I think venture community also started to support those type of crazy ideas like a
Mm.
cow collar, which is, leading to these successful companies.
It's all cycles. I think it's funny. What is it like the generation one of venture here? Sorry, generation zero.
Yeah,
You are talking like again the zeros of the world, the green buttons,
yeah,
and all of those are starting to get exits. Then you get to the power by proxies, to the Apples, and then even at that point, Rocket Lab was still fairly modest. Like it
yeah,
wasn't huge and massive as it is now, but then you start to get that hyper compounding effect, and I think it's been amazing. But there's so many stories like that. But I really want to get into like the fundraising journey
yeah,
of like Halter, because you talked about that venture journey.
yeah,
That's been a long, long time
yeah,
coming.
yeah,
And like it's awesome to see that compounding now starting to happen. But man, like that kind of speaks to why people also don't know what's coming in New Zealand because
yeah,
we haven't had time on the clock.
yeah.
Um,
Yeah, and there's many companies in that kind of age group that Holter's in, which are, very strong companies and growing, and eventually they will reach those type of outcomes
yeah.
because of that consistent work by that team. And we're going to hopefully see a lot more outcomes like Holter, which will again create that flywheel the same way that you said, right?
Dude, I think when you like, it's hard to not know, but the valuation arc journey, when I took a look at some of the data, and it's like technically founded 2016 is what they say.
Yeah.
But if you really peel the layers of the onion, I think there's some old footage of Craig Piggott pitching at an Ice Angels dinner a few years prior to that, with Robbie's help somewhere.
Yeah.
And it's kind of shows you it's been a super like long journey or something.
Yeah.
But then it's like apparently it's taken 9 years to get to US 1 billion in value, which when you think about it, that's the full life cycle of a venture fund,
Yeah.
closed end venture fund,
That's
10 years.
yeah.
So it's taken a full vintage
Yeah.
to get to the one turn.
Yes.
And then when you look at again the ice houses and the seed fund ones and whatever, which have exposure
Yeah.
to Halter, man, by the skin of their teeth, they just got through on some of that conversion to returns.
Yes.
But it kind of shows you you're an early believer, and so it took 9 years to get to US 1 billion,
Yes.
and then another US 1 billion in 9 months,
Yeah.
which then speaks to the compounding power of like what happens. And so um, it's like John at GD1 here always tells me there's always this effect as well, which is like scale begets scale. And I think the moment you get, and this is for all the founders out there, like if you're raising capital and you start to get notable folks on your cap table as well, and if you're doing well, like this isn't magically like happen if you're modest and underperforming, but you also have to be doing well. But when you get kind of one or two names and then the third name and the fourth name, it starts the flywheel. And like almost, I'm saying this in a very like pithy way, but it's like too big to fail,
Yeah.
if that makes sense. And it's kind of like Bessemer gets on board post every like Blackbird, DCVC all coming in small ways.
Yeah.
Founders Fund doubles down a little bit then, I think.
Yes.
And then it just starts to catapult. And then Bond comes in and
Yeah.
people start to go, oh, wow, Mary Meeker's team are starting to look at this.
Yeah.
And then in the US, like I was in New York when that round transacted, when the bond round happened. And I was at this Kaufman event chatting to a big LP.
Mm.
And this is an American LP. They have no exposure to New Zealand venture. And we're sitting at like this round table talking about venture capital. And other people at the table with me are all US VCs and all talking about US companies.
Yeah.
We go around and she asks where people are from. I say, I'm from New Zealand. And I expect that to be the extent of the conversation. She spends the next 40 minutes only engaging with me at that table, talking about Halter and the New Zealand tech ecosystem.
Yeah.
So let that sink in for a second. That is a profound sea change difference
Yeah.
in how LPs even look at this.
Yeah.
And so all of a sudden, because of these raises, there are institutional LPs in the United States going, "You're from New Zealand?" Like we have exposure to Halter through some of the brand name VC funds. That's too late for us to be getting exposure.
Yeah.
So tell me more. I like blows my mind. So I'm hoping it's like more of that kind of good stuff to come, and we're seeing it in our portfolio.
Yes.
Like the Ivo capital raise.
Yeah. Exciting stuff.
Yeah. And so you're starting to see, and even more recently, we've seen with the Dawn Aerospace's raise, you're starting to see all of that trickle effect come through. But man, it takes time.
Yeah.
Just wish we could accelerate it.
I guess now that you mention it, like I've been hearing a lot about, founders who are quite, I guess, afraid of taking on venture capital from specific funds or certain funds because they're afraid of, being control being, escaping their hands as
Yeah.
founders, right? And giving examples of famous names, the likes of Uber founders being kicked out by Benchmark, things like that. But I find that quite interesting as a story because there's so many,
Oh man.
like those stories are like a portion of like the wider universe of venture funding and rounds. And also that was like this old generation of investors who would happily tell you that that was just the way venture was done back in those days where, the early generations of venture, they would come in, invest, and then they'll look for like a CEO who has
Yeah.
management experience. But Founders Fund came out with that whole idea of like we back the founders,
Yeah.
and that eventually became standard. So it's very unlikely that VCs like us would
Yeah.
like take you out of your company unless there's some like crazy ass stuff happening.
Yeah. And I think that's spot on. I think there's a lot of anxiety in like the founder circle around like losing control of your companies. But that Uber example, I remember at the time, why did Bill Gurley execute that change and do all those things? It was because Travis Kalanick was doing stuff like invading the privacy of like sexual harassment and like, dare I say it, I think it was like some poor woman or multiple women had like really bad things happen in the back of Uber cabs. And instead, Travis was using the God mode view of like the dashboard and the system to run smear campaigns against these women to damage their credibility in court for like, so it's very important to realize the context. So like I find it really hilarious again when like founders super early in their journey are like, I'm not going to have a board. I'm not going to like, have any rights where you get to have a say in things. It is your company. And to your point, none of us wants to be the founder. But we are also stewards of capital. And we have a bit of fiduciary obligation here in terms of like risk management. And it's kind of like, it's more as we need to have rights in place that mean that if you do some really dumb shit, then we can call you out on that dumb shit rather than it being a toothless kind of like, hey, buddy, please don't keep doing dumb shit, which impacts the value of this company and your life's work, and then potentially puts us into litigation. And similarly, on like the hardware and deep tech side, it's more of a quirk here in New Zealand, but like every time you do hardware and deep tech investing and you join the board, like the director's obligations for health and safety are through the roof. And so every time a portfolio company of mine, whether it's in like energy, manufacturing, someone gets a near miss or like a finger gets cut, all the directors are just shitting bricks, not because like we want to take control of the founder's company, but it's like you don't realize what you create in that moment, which is a whole ton of liability. And so the net, like if I had to really truncate this, so much anxiety, but I think founders need to realize boards are really there to be exactly that, a sounding board for you. You bring problems, you kind of go, I've got a problem, I've got a solution. Importantly, I've got a solution. You're here to listen to how I've thought about it and critique it. You don't necessarily come and be like, I'm presenting at you an update. But I think there's a lot of like really weird misconceptions here. And I've seen the full range, whether it's companies that are pre-revenue, doing tens of millions, some in our portfolio doing north of like 50, 60 odd million. As you get larger, you realize what's at stake. And if you're smart about it, you realize you want to minimize those risks. But if you're naive about it and think you are essentially immune to those risks, then that's a risk.
Yeah.
And so again, it's like boards, no one's here to take your company.
Yeah.
Like no one, and to be frank, none of us really gives a shit about running your company.
Yeah.
Like we really don't.
Yeah. We are running our own business.
Yeah, it's already hellish
Yeah.
running a venture fund.
Yeah.
With all these portfolio companies and context switching. And not that our work is harder, but it's like, why would I saddle myself with the responsibility of micromanaging you? That is not the intent. But man, there's so much misinformation and like misunderstanding. And particularly, I want to say this, it's always the pre-seed and seed founders who get a lot of bad advice. And I think they're getting well-intentioned advice, but it's like, it comes from a very skewed place because the people giving the advice have rarely been on good boards and they've rarely seen scale at the board level. They've been operators and that's awesome, but there's a difference. Like there's kind of what's that concept of like your nose is in like kind of smelling the business versus fingers in the business. You want to kind of be nose in, fingers out. You don't want to be like just directing and doing all that shit. You definitely want to be able to be like, hey, can this pass the sniff test? Is this going well? Who I have concerns. But a lot of these advisors to super early stage pre-seed seed companies are like, boards are terrible. Boards are bad. And it's like, well, I have news for you. If you do hit it out of the park and you start making in excess of $10 million in ARR, odds are pretty damn high you're going to start to have governance wrapped on you. And, let's say you get to 50 million in ARR. Unless you are quite literally the best CEO founder that we've ever had, you will likely have a board.
Well, yeah. Well, even the best founders in the world have boards, right? And I think that's the weird thing where maybe if us saying it sounds like we're just talking our book, but those type of founders should definitely talk to the likes of a Craig and successful founders who have boards.
Oh,
They've raised money from the biggest investors. If they were afraid that they're going to lose control, Halter wouldn't be where Halter is.
Speaking of that, this is something that Robbie from Ice House said to me over like a drink ages ago, and which is when Halter just did their bond round. And then I think they flew to the U.S. to attend some ranch in Wyoming, and it was an awesome experience. But Robbie said he had a bit of a chuckle because they had a board meeting, and then around the board, everybody described themselves as the seed investor. But what was notable wasn't that everybody called them the seed investor. It was the amount of seats at the board table at what was a Series C or D. And we're talking Blackbird, Data Collective, Bond, Bessemer, NewView, Ubiquity, Promise, Icehouse, Founders Fund. Like I'm already up to 9 fingers, and that's excluding the founders.
That's a big board.
That's a big board, right? And so this notion of like boards don't control me, like people need to really grow up and realize the reality. And it's like boards don't control you, but realize they're going to be there. They're a function of this.
Maybe we'll wrap it up here and we'll come back for another round of the further chat in the next fortnight. Hopefully we continue doing this over every 2 weeks.
Yeah.
And talk about some of the topical stuff that's happening in the ANZ region, and what we're seeing, and hopefully try and just add value to the space.
Yeah, I'm excited, man. Looking forward to what we can do and what we can keep talking about. Yeah.